revolution of economics, politics, and government. Welcome to the blockchain. Power corrupts, money is power. The power to control the money is one that is now in the hands of those who pretend we can't function without them. So how can we do something about it? Working hard to get a raise, lifting that wage up. Inflation takes it like a hidden taxation. Manipulated interest rates to give the banks a way to create money with the loans that they're giving out daily. That means our money is dead and we gotta pay back more than 100%. No wonder then why the middle class is going under when the ones above them gotta cover and come to collect. And many have no access to banking, making payments or saving, so more fees are taken. And every day the gatekeepers are trying to stop change. We cannot wait. Welcome to the blockchain.
Things are about to change. Open up the gates. Systems get replaced. Bitcoin, decentralize the trust. Security, transparency. The network's run by us.
Bitcoin is a decentralized ledger, and the currency is its first enterprise ever. Secured by the worldwide incentivized network, can't be stolen or controlled by any size effort. You can send it anywhere and instantly. No one can intervene, no third party in between. There's no counterfeiting, algorithms control the outer limit to how many coins can get released. Programmable money, no government can seize it. Payments can be customized by sender and receiver. Contracts written, cementing your agreements with terms that can't be bet. Once you consent, then it completes it. Autonomous businesses are possible when profit is distributed amongst those adopting it. Paradigm shift, we must adjust to the end. And with the blockchain, Bitcoin is just the beginning.
Welcome to the blockchain. Things are about to change. Open up the gates. Systems get replaced. Bitcoin, decentralize the trust. Security, transparency. The network's run by us. Bitcoin.
Now that we got control, we're not gonna let it go. My people all around the globe, we gotta keep building, building, building. Now that we got control,
We got control.
we're not gonna let it go. My people all around the globe, we gotta keep building, 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 building.
Thank you, Mr. Conrad Dias. Before I invite our next speaker, I just want to remind that you all to complete the feedback form which is given to you all. So at the end of each session, please complete it, and this will be collected at the end of this event. So our next speaker, he is an alumni of the Harvard Business School and CFA charter holder, also an investor in financial technology and blockchain platforms in USA and Asia. Earlier in his career, he became the youngest chartered management accountant in the world. Currently, he is the managing partner at Alfiniti Ventures. Mr. Jayamin Pelpola, he'll be talking on innovating around the blockchain.
Good evening. So let me tell you a bit about how I got involved in the blockchain. Back in year 2015, summer, when I went for my 5th year reunion to Boston, I was just having a chat with one of my very good friends. He was a classmate of mine, graduated 5 years back. And he said, we are doing this interesting project in an interesting area, in digital currency, in Bitcoin. And I have, by that time, heard a little bit about Bitcoin, and the technology behind that was a little bit of a black box to me. So what happened was, when I got into deeper discussions with him, I realized he's working on something very interesting. So this is the technology which he was working on. So, and even after a lot of descriptions and discussions, he's like, okay, let's do this together. So you leave Sri Lanka and come. Let's work on this particular project. I'm like, work on what? Block what? Oh, it's like the blockchain. And I'm like, mate, I've taken enough gambles voting for Yahaparaniya. My risk quota for this year is over. So let's try to do something which the financial community as a whole has wider acceptance. At that time, there was a lot of volatility around Bitcoin. There's a lot of volatility around blockchain. There's a lot of volatility around the people involved in the exchanges and other business models. So after those discussions, and after studying this business model in a little bit more detail, what we realized was the blockchain, the success of the blockchain is now decoupled from the success of Bitcoin. So Bitcoin can go from $0.6 to $600 or $1,000 or whatever that is, but the blockchain technology has decoupled itself and is taking a life on its own. So as a result, the scalability of that has improved a lot. If I want you to take home one thing from this discussion is that you don't need to understand a lot of how the technology and the protocol and the hashing works on the blockchain and how the blockchains and the blocks are created. What you need to understand is that there are business models which can be disrupted, and the blockchain can be a tool. Wherever there is efficiency to be gained in terms of a lot of transactions to be processed, wherever there's an issue with regard to trust, that there's an opportunity. Wherever there's an issue with regard to multiple parties being on multiple systems which do not talk to each other, there is an opportunity. So you don't necessarily need to understand the mathematics behind the blockchain and hashing all of this together, but look at it as another technology which will help you solve business models and business problems. So as Conrad alluded to, the Bitcoin is not the first attempt at a digital currency. It may be the 150th attempt at a digital currency. But what did exactly Satoshi Nakamoto solve in his paper? By the way, that phase, I don't know whether that is Satoshi. His identity is not established yet. What exactly did he solve? What other models of cryptocurrency could not solve? So what we think as investors in the blockchain, we think three things contributed to this tipping point. Blockchain going from an infant technology to a technology which people call Internet 2.0. The key difference for me is that Internet is about organizing information. Google is about organizing world's information. Blockchain is about organizing world's trust into one platform. So for me as an investor, that is the key difference. In the internet, when there was trust issues involved, always authentication and validation happened offline with documentation and other offline processors and centralized offline authorities. But all of that functionality has brought onto a technology platform called the blockchain. So it is internet of organizing information plus organizing trust into one platform. So that is point number one as an investor to me. Now, once that was done, once that trust was achieved and Satoshi Nakamoto's paper was established as having solved the trust issue, what happened next determined how the blockchain took off. And then the first important development was the matrix or multi-dimensional tracing, which the blockchain can bring in. Now, in the offline world, if you are given a currency note, that currency note has a serial number, right? But the central bank does not know a particular serial number of a currency note is issued by this particular, used by this particular person, or it's in my wallet. They don't know that. They can verify my account balance and say I have 1 million rupees, but they can't tell me which notes did I deposit to get that to 1 million. But so in the blockchain, we have a matrix or multi-dimensional tracking system. That is, I can say a particular Bitcoin from the creation to today, who actually transacted on it, and if I have 10 Bitcoins today, what are the serial numbers of those 10 Bitcoins? So that is what tipped the issues the regulators had in favor of the blockchain. Earlier, regulators were having a negative view on Bitcoin and blockchain because they thought it is going to reduce their control on the overall economy. But as a result of this factor coming into play, that you can, even as a regulator now, basically look at multi-dimensional tracking means there's more transparency and I can track it more. For So I think that's one important tipping point why blockchain went to the next level. Second one is a self-sustaining trust and incentive system. That is, the incentive system, as Conrad alluded to, is that Bitcoins are issued to the miners or the people who do the maintenance work of the distributed system. And the system of creating blocks and sealing of blocks through the Bitcoin cryptography reduces transaction fees in potentially trillions of dollars a year in the global economy. So moment that this was signed off saying, okay, this is verified and this cannot be broken, or it cannot be questioned, because what we call is for mathematical completeness and a system's completeness, we use the concept called Turing completeness. That is, for the Turing machine to be simulated, how random numbers can be hashed, and the complexity is a standard called Turing standard. That was not achieved in the previous blockchain, but in the Ethereum, which was improved subsequently, they cracked that, and that is available in the Ethereum, and Turing completeness is available. So that is a gold standard of security. And the third one is the hashing logic. As I said earlier, the hashing logic is very complicated. It's mathematically driven. It's done by multiple nodes, or probably millions of nodes around the world. But that hashing protocol can be separated from the business logic. So the protocol of the blockchain can be used, and the business logic can be changed. So now imagine the usage of the blockchain. So it was initially used for Bitcoin. Now it can be decoupled, and this secure distributed system can be used for anything else. So the decoupling, so whenever APIs were built, so the decoupling can be done. So that was a third tipping point for us to increase the adoption of the blockchain. So rolling back the clock to 2015 is that this is the landscape about 1.5 years ago, mid-2015, what it was. So I want to compare and see how this evolved and gave us opportunities, so you can think of other industries like the financial sector and see where the gaps are and see what the business models you can come up with. So look at the base. So that is the infrastructure and the base protocols. On top of that, you build the middleware and the APIs to give access to the base infrastructure. And then this is the third, is the applications and solutions. And all of these are business models as of 2015 in each of these three areas. Can you tell me what these percentage numbers are? That's a good guess, okay. It's actually the percentage of venture capital funding gone into each of these three areas. So can you see, as a result of more 6 out of $10 going here, look at how crowded it is. The used cases or the applications and the solutions here, this area, the top area is now getting very crowded, and it is getting very fragmented as we speak. So this is the slide which got us investing in the middleware of blockchain at that point of time. So there was huge investments going into applications, and anyway, this was established by then, and still 3 out of $10 went in there. Only 10 went in there, into the middleware and the services. So at that point, there was a gap in terms of a lot of people trying to get in terms of end solutions, and there was a lot of calibration on the bottom, and the middle there was a gap. So we invested in that particular area. So one point here. Now the infrastructure and the basic protocols can be extended through public and private blockchain. This is not necessarily in the financial services area. So these protocols can be extended into other sectors. However, the application solutions and the middleware needs to be probably industry and sector specific, and therefore still a lot of opportunities available in those sectors. So for example, chain.com is a player in the middleware and the APIs connecting the stock exchanges to the rest of the financial trading ecosystem for trading of private financial securities. They only do the APIs. So using their APIs, everybody can connect to the blockchain. So they absolutely suck at infrastructure. but they got API game right. And a word of caution, if you're trying to look at how, if you're trying to go to the third category, look at how crowded the applications and the solutions can be before you actually look at getting involved in the applications and solutions side. These are more consumer facing. There's a lot of money coming in because it's the easier one because the consumer model is there. You just need to change the back end. So those are kind of, if you look at all of those, they solved UX issues, user experience issues, as opposed to technology issues. Okay, so this is how the landscape for blockchain technology and investment segmentation worked 1.5 years ago. And what does it look like now? Let me take a specific example of the payments. So in terms of payments, Visa, MasterCard, American Express, and Discover has controlled the world's, about 60% of world's credit payments at the POS level. So they are in trillions of dollars of business. Even innovations like PayPal and Stripe built on top of the Visa and MasterCard network. So as a result, transactions fees went from, so if Visa MasterCard was charging us 2.5%, PayPal and Stripe may be charging us anywhere between 4 to 5% because they anyway have to pay about 2% to Visa and MasterCard. So that base was not disrupted. So now blockchain represents that base of Visa and MasterCard can be disrupted. Okay? So in terms of the challenges, the current problems which you see, even new business models like PayPal and Stripe built on top of Visa, the transaction cost of 5% is for emerging markets especially, like Sri Lanka, if you use Stripe or Braintree or PayPal or any other transaction which builds on top of Visa and MasterCard, the transaction costs are north of 5-6%. So the blockchain can, at a cost of 0.05%, do that if systems are set up. So 5% almost becomes 0 in that sense, right? So imagine that multiplied by trillion. So so now what is Visa and MasterCard doing? So they came and invested in the blockchain, and they are now translating some of their infrastructure to the blockchain because they knew they are going to be disrupted. And electronic wallet models are too expensive to build on the Visa and MasterCard, again, because of the same reasons. Again, cost is too high. So on this side, there is a lot of potential for disruption, but the market is getting fragmented, but still there's opportunity to do models which cost less than 4-5% especially when there's international transactions involved. Another issue with the blockchain, as originally Satoshi wrote the paper, is that the name blockchain it's a chain of blocks, and it's a sexier name for batch processing. Batch processing done in a distributed manner. Each batch, which is a block, is done in a distributed manner, right? But when these blocks are created, the computer programs can run, let's say it's a 10-minute block. Typically, it is a 10-minute block in the Bitcoin cryptology. When this is run, there's no guarantee the sealing of block or the confirmation captures all the transactions which happen in that 10 minutes. There can be fall-throughs, according to the algorithm. So typically what falls through are small transactions, small Bitcoin transactions or smaller transactions. So there are methods such as when you post a particular transaction, the poster of the transaction, let's say I bought a coffee from my Bitcoin wallet, and when I do post that, I can say for whoever who's processing this, I give you a Bitcoin 0.005 as a fee. So I can post a fee to the processor to make that small transaction attractive, right? So still, the cost of a small transaction is not something the Bitcoin blockchain solved, but the Ethereum and revised rules on the Ethereum can solve for inclusion of small transactions by universally putting a flat fee for any minimal amount of transactions. Saying, okay, up to $10 of transactions or up to 0.1 Bitcoin, you have to give this much of Bitcoin to the producer. So that will solve, using the protocols of the Ethereum, it will solve for that fall through, that is for small transactions. So essentially, the outcome of this is we should have disruptions to how Visa and MasterCard work coming very soon. They have, rather than getting killed by the blockchain, especially Visa has invested in blockchain technology now to run their backend. Whether the transaction cost will come down below 5% and 2.5%, that may be going to the profits of Visa, but we don't know that yet, but there's a potential. So it's not only in financial sector, we can apply the blockchain. So wherever there is efficiency required, there's a lot of transactions getting processed where there's efficiency required, you can apply the blockchain. Where there is a lot of trust issues and offline validation and authentication in the customer experience and the business transactions, it can be applied. Look at the exchanges. Even though exchanges have been here for many years, stock exchanges, and their processing and settlement has been refined and fine-tuned over many years, still, there are days taken to process transactions, and there are days taken to move money from one point to the other or one purse to the other. Right? So all of that can be saved using the blockchain, and NASDAQ is already doing that with private transactions. Let's say you had, let's take a private company. Is Snapchat private? Yeah. So if you have shares of Snapchat, you want to trade it with somebody else, you can do it on what they call the second market of NASDAQ, and that is powered by the blockchain. And the next step will be roughly trillion or trillion and a half worth of exchange traded funds, not the commodity side, the equities side may come on to the blockchain. So after they complete the private trading transactions. So there's a lot of efficiency gains that can happen. There can be same business models, efficiency gains. There can be different business models coming up as a result of the blockchain. So just to cap things off, this is a rough framework which we use when we actually currently look at blockchain opportunities, where to put money, where to put our effort. So this applies to entrepreneurs as well as investors, right? So on this side is the size of the impact of the market size. The other one is the number of ecosystem connections that needs to change. For example, it's very complex to change something like Visa and MasterCard because they are in 196 countries. They are connected to each one of the financial systems, or most of the financial systems. However, if you create a flat ledger, everybody has to come on board, and that coming on board may be country by country basis. So that has to be managed a lot. So that would typically come into global payment processing, the number of connection points. Top right-hand corner, number of connection points are very high. So the effort which you need to put in and change the ecosystem is very high. But on the other side, number of connections like digitization of assets, real estate registries, other asset registries, property registries, patient records of a given hospital. So the solution may be mainly through private blockchains, because people are now, because private blockchains have taken up most of the new developments, people are comfortable with it, and people know if they put money, R&D and other investments into the private blockchains, that is their own blockchain, they can get returns out of it rather than the public blockchain. So they will put more and more resources. I think the development of private blockchains will eclipse the pace of development in the public based protocol infrastructure, and that will be funded by consortiums and big financial institutions and semi-government institutions, which is already happening in countries like USA and Australia. USA, NASDAQ is doing it. Australia, ASX, Australian Exchange is doing it. So this is the general idea which we have. We typically fund the guys which you see in green, which is the top two boxes. So this is just our current thinking. It may change as we see more developments. We see those two as suited for innovation and external disruption. Most of at the bottom here, where the number of, especially when the number of connections are high and the impact is low on the total ecosystem, we see that is more suited for internal innovation, that is private blockchains. So these are probably how business models will get into the public and the private domain. Okay, so that's it. So we'll take up any questions probably later once we have this. Thank you.
Thank you, Mr. Jayamin.